What's up, guys? Can you hear me? Bit of mic check. We get started. Give it a couple seconds, minutes. All right, so it's March 27th, 2025. I'm gonna do a daily breakdown. We had a sideways day, gap down, then we rallied. So that's a big down. Initiative was a sell-off, so big down, big up, sideways price action. This is the daily chart. This is the 15-minute chart. We've been selling off since February 20th, 21st. The spike actually started on the 19th. That's the high tick, and then it started selling. 21st is a breakout bar that produced the bear gap here. Got good follow through. 1, 2, 3, 4 bear bars under the EMA after the breakout. So we haven't seen 4 bear bars in a while. This ends up being the first reversal, and bears shorted. Puts us in a channel. The first opposite bar puts us in a channel. And then once we get a micro channel, so we could say these 2 bars are a micro channel, that puts us into a trading range. The trading range got 3 legs into the EMA, so that's a wedge top. It's a bear flag. Leg 1, pull back with 2, pull back with 3. Wedge top bear flag into the EMA, selling off, and now bears shorted. This is a trend bar, and it was a better short than a buy. This was just a pullback into the EMA. This is the first pullback after 20 or more bars. We can actually just check real quick. Computer's lagging a little bit. Okay, there we go. So just about 20 bars. This is the 21st bar. First touch of the EMA is a good sell for the bears. That's what we saw a few days ago. This is the 15-minute chart. Gap up, breaking out. First opposite bar starts the channel phase. Channel for 3 legs higher. Leg 1, pull back 2, pull back leg 3. The third push became a higher low, and it ended up being a breakout to the downside. There's 3 types of trend line breaks we get. In this case, we're talking about the bulls side. Bulls broke out, trend line break. They want a new high, so that's the best option for the bulls. Breakout, pull back, new high. That's what they got here. Breakout, pull back, new high. Second option for the bulls is breakout, pull back, and a double top. I'm sure I can find an example real quick. Well, just imagine that. I'll find the example after. The third option is breakout, pull back, lower high. That's the worst for the bulls, best for the bears. So breakout, pull back, lower high. That's what that's the price action. That's the bears got a lower high. Start to break out below the EMA. Only problem is there's a big gap up here. So we have a big up, a big down. That put us into a trading range today. We did get another lower high. So just how I talked about 3 trend line breaks, we have another trend line break here. Rally, pullback, trend line. This is the trend line break, is a pullback. And then the bulls want a new high. However, bears got a higher low. Lower, high, higher, low. Those 2 always confuse me. So yeah, they got the higher low. That's bearish price action, but we are trading towards the low of this trading range. So if we are in a trading range, and this is nothing more than a bear flag, bulls are gonna want to buy. Bulls are gonna want to buy support. Bears are gonna want to break out and go for a measured move of the range. So they want this bull leg here. Measure move, break out of that, puts us to the bottom of the last range we had, which was the rally. So it puts us right to the bottom of this rally here. This bar, this range. Okay. If you guys have any questions, feel free to ask them, and I will answer them most likely at the end, unless it's something that makes sense to answer right now. I'm not sure I'm going to be doing these live streams every day. Today's more of a test run. So yeah. Let me know what you guys think. Give a quick shout out to all the supporters and new members. I appreciate you guys. Thanks for always tuning in. Let's do it. Gap down. Bar 1 is follow through. Bar 2 is follow through for bar 1. However, I think this is climactic price action after yesterday's sell off, and bar 3 actually closes the gap that was put in March 21st. Then we get a rally. Bar 3, I don't think if you buy bar 3, I think that's a risky buy. But then when you start to see 4 and 5, you think bulls, the first target is going to be the gap close, and now bulls are breaking out of the morning range. 1-to-1 is a fair target. That's meant right there. 6 follow through. 6 is a good follow through bar for the last 4 bars. It's a bull bar above the EMA. Yesterday we had a few bull bars above the EMA and then sold off today. Now we're getting that price action again. Bar 5 sells off. Bar 5 rallies and then sells off, but it's still a bull bar. So now we have 5 bull bars in a row. That makes bar 6 the first pullback in the market cycle. This is the start of the channel phase. Bar 9 sells off and then rallies, becomes an outside bar, trapping bears down here. And bulls are going to be hesitant to buy because if this is the trading range, they could be buying the high of a trading range. This could be a high one. Nonetheless, bar 10 follow through, and then bar 11 is another pullback. So now we have 2 failed bear legs for the bears. Leg 1, pullback. Leg 2, bar 11 ends up being a better buy. Bar 12, bull bar closing on its high, follow through 13. Another bull bar closing on its high, and so it's also closing far past this range here, but we are getting into the later legs. So you could say leg 1, pullback, leg 2, pullback, leg 3, or you could count it leg 1, pullback, leg 2, pullback, leg 3. This is a double top on the EMA, so just keep that in mind. A double top in a bear regime is a better sell. We are in a bear regime, so bear setups will pass, bull setups will tend to fail. So shallow pullback, 2-legged pullback by the bulls, by the bears. Many bull bars closing on their high. 16, shallow, the first reversal after these 4 bull bars. But if you're going to take 16 for a buy, I think you have to scalp out because you're buying into a third leg, which is better to just wait than to look for a good trend. But 17 was a good scalp if you bought it. 18, follow through. It looks like the bulls are going to get continuation, but we're in the third leg and we're trading right under the EMA. So be skeptical if you're going to buy 18. You got to be quick to get out. I don't think 18 is a good buy. 19, bear bar, somewhat of a double top. There's a high tick on 19. 20, first bear bar closing on its low, no tail. All the other bear bars have tails, excluding these 2. 21, bulls are still buying pullbacks. 22, bull bar looking like follow through, but then we see 23 and now we have a double top. What causes a double top? It's trap bulls. So bulls bought here. Price pulls back, they buy more, and they get out at their original entry. At the same time, bulls get out at their original entry, bears are going to short. So this creates enough selling pressure for a leg down. This is a double top in the third leg, fourth leg, however you want to count it. So I think it's a pretty good short. I did not take that, but just in general, from context perspective, bear regime, selling, double top in a bear regime. Where are we? So 24, bear bar closing on its low. And now look, bulls went from buying bear bars closing on their lows, or just buying bear bars in general, till now you see 24, bears are shorting bear bars. So something has changed where maybe we could be at the higher trading range. If you're long, looking for a buy at the EMA, thinking, oh, we have a lot of bullish pressure, it's going to be a bull day, ask yourself, what's the context? Well, the context is this is the first trendline break after a big sell-off. This got me many months ago. I got shredded on a day like this because I thought the EMA would be a good buy, so I was scaling in, and then it pulled back, and I didn't sell out of my position. I turned a winning trade into a big loser because I thought a rally like this after a sell-off would get continuation. However, on a higher time frame, let's just say 15-minute, that's the first trendline break. And we talked about trendline breaks from the bull side. Just go over real quick. Bears want there's 3 types of trendline breaks for the bears. This is a sell-off, pullback, new low. That shows us there's trend continuation. Sell-off, pullback. Same low gives trap bears a chance to get out. Or the third option, which is the worst for the bears, best for the bulls. Sell-off, pullback, and then a higher low. And that's what we got today. So this rally in the morning, if you were thinking, why didn't I get trend continuation? It's the first trend line break on a higher time frame, and that trend line breaks right there. What happens first trend line breaks? They typically get sold, and that's what happened. So now we see 25 bear bar closing on slow. Good follow through 26, 27, 28. We have about, what is that, 7 bear bars? 1, 2, 3, 4, 5, 6 bear bars closing on the low. So why is this a good buy, but this isn't a good short? And I think it's subjective, because technically if you shorted the first pullback 29, you actually could make 1R very quickly. You short and get out. If you short here, you're shorting into support, and the more bear bars we have in one direction, the higher chances for a pullback. And there's more body on 29 than tail. See, these have more tails than, so this is a trend bar 29. So I'm talking about bears that wanted to short here. If you didn't get out, you'd be trapped. Give me 2 seconds, guys. Okay, so I hope that makes sense. If it doesn't, let me know. Now we have a bull bar closing on side 31, strong bull bar closing on side 32. You might think this is a good buy, but you're actually buying a pullback from this sell-off. This is a pretty strong sell-off in a bear regime. Bulls get 3 legs. This is interesting price action. So price action is fractal. That means what happens on one time frame will happen on other time frames. And check this out. So 3 pushes up. Leg 1, pull back, leg 2, pull back, leg 3. Bar 34 became a good sell, and bears actually made 1R before bulls made 1R on bar 34. Was that 34, right? Yeah. Look at the daily. Look at the daily chart. Sell off and 3 pushes up. Leg 1, pull back, leg 2, pull back, leg 3. Bears actually made 1R shorting this before bulls did. Sell off, 3-legged pullback. Bears make 1R on the first touch. Same situation here. Give me 2 seconds. Oh, I thought the stream turned off. So that makes, I think 35 is a good sell. It's also testing the breakout point of 24. The bears that shorted 24 made 1R very quickly. So when the price comes back, that's going to be a strong breakout point. And then you get a second leg down from these bars, 23 through 28. Within this leg here, there's 3 legs. So we look at major legs, and the major legs generally have 3 legs. So you could say like, so this is leg 1, pull back, leg 2, but the leg 2 has 3 legs within it. Leg 1, pull back, leg 2, compression bar, so small pullback, shallow, leg 3. You might say, well, where's the pullbacks in this leg? Leg 1, pullback, leg 2, tail on 26, so there's a pullback, leg 3. There's tails here too, so there's some pullbacks going on. Leg 1, pullback, leg 2, pullback, leg 3. That's fractal. That's a smaller time frame. Leg 1, pullback, leg 2. 37 rallies and then sells off. Bear bull bar closing on its low, has more bearish price action. 38 bear bar sells off and then rallies. So there's a small range here. 39, the bar is shrinking. The market typically goes from expansion to contraction. So think of yesterday's price action, expansion. Think of today's price action, contraction, expansion, contraction. Bar 40, big bear bar closing on its low. I think it's good enough to go 1 tick below, and it does with 41, 42. That completes 2 legs down in a trading range. We're into support now. We're trading right above the bar 4 breakout. That ends up being support for most of the day. There is a gap here that ends up being support, which is color green. And there's a gap, probably from yesterday somewhere. Yeah, there's gaps are all right here. So there's 2 gaps above below trading range behavior. Delete that. 3 legs down. Now, if the market cycle was going to reset with this leg, the market cycle resets here. Opposite bar 29 starts the channel phase. Leg 1, pull back. Leg 2, pull back. Leg 3, trading range, or excuse me, the market cycle favors sideways price action in the 3rd leg. So this could be seen as the 3rd leg, and then we get a bull rally here. 3 bull bars in a row is not strong behavior for a bear trend. So if you're thinking we're going to collapse all day, bulls just got to rally. The bear trend could be ending soon. We could be going to a tight trading range. That's actually what we got with bars 46 through 54. Tight trading range, and then now we start to see bull bars closing on their high. 55, 56 is breaking out above the EMA. 57, good bull bar closing on its high. Shallow pullback. 59.60 led to a leg 2 here. This whole price action right here was showing for its own second leg, or you could say it's its third leg. So you could say leg 1, pullback, leg 2, pullback, leg 3, trading range behavior. We go sideways and sell off to the back to the trading range low down there. 66 is a bear bar closing on its low, and it's breaking the support right there. So well, it's not necessarily breaking the support. It did kind of, but it rallied back, so it tested the support. 66 is not good. So if you're hoping for a rally all day, a bear bar closing on its low after this much price action is not good. 67, bear bar closing on its high, followed through 68. 69, good bull bar closing. That's it. Did I say bear bar closing on its high? 67, bull bar closing on its high, followed through 68. 69, bull bar closing on its high, would follow through on 70, 71. There's 3 legs here, so expansion, contraction, expansion, contraction, expansion. Bad follow through 72 on resistance. Again, we're still in a bear regime. 73 sells off, leg 1, pullback, leg 2, pullback, leg 3. Climactic price action towards the end of the day. Bears get the close below the EMA, so that's good for them. And we're just trading around the low of the previous range. We're trading around the bar 2 breakout. Oh, excuse me, bar 4. That's the second bull bar, so I said bar 2. Okay, we'll just go over some gaps real quick, and then I'll do measured moves. And if anyone's got a question, I will answer. If not, leave the questions in the comments, and I will answer them, or in the Discord. We have a gap here. We have a gap. So 2 gaps, 1, 2. I think it's climactic price action. If you're looking to get short, you're shorting after all this, and this is bar 2 is really far away from the EMA. It snapped back. Now we have 2 gaps here. You could measure that for a target, and that was met with 13. So gaps could be also used as targets. We have 3 gaps in a row, strong enough for at least a tick above bar 5 or 7, and we get that with 9 and 10. We have another gap here. It's becoming late in the trend, so after 3 legs, leg 1, pullback, leg 2. Excuse me, leg 1, pullback, leg 2, pullback, leg 3. Gap in the third leg could get closed soon, and it does get closed with 24. Now we have 3 bear bar, three gaps, 3 bearish gaps, and they get closed pretty quickly here. So that tells you we're in trading range behavior. Big up, big down, gaps are closing. This gap stays open, so there is still a little bit more bearish pressure. If you're buying 30, 34, think about that. There's a bear gap here that gets tested 35, and it ends up selling off. So I think setting a limit order at the breakout point was a pretty good trade today. You can catch a decent amount of points selling down. You have a big gap here at the end of a second or third leg. That could become a bull target, and that gets closed with 57. Now all the gaps are getting close to this trading range behavior. And trading ranges gaps get closed, and trends gaps stay open. So yesterday we had gaps that were staying open. These gaps are staying open, so that tells you that bear pressure is stacking up and bulls are getting trapped. Here, gaps are closing, so that lets you know that bulls have whatever side is trapped is able to get out at least at break even or for a small profit. The second EMA. So there's a question from Kevin, and when I get a question, I'm going to read it so the people that watch this later know what it is, and later I'll figure out how to get the questions on the screen. So the question is, what is the second EMA you have on the chart? Both EMAs are the 20 EMA, but it's the 45-minute time frame. This is a 20 EMA, but it's on the 5. It's the chart. It's the 5-minute. I use the 45-minute EMA as a higher time frame EMA. Or excuse me, as the market regime. So if we're below it, market regime is bearish, bull setups will fail. If we're above it, market regime is bullish, bear setups will generally fail more. It's not 100%, but it just helps with a little bit of, if you want to get long, it's better to scalp in a bear regime. If you want to get short in a bull regime, it's better to scalp. Kind of that nature. So we have gaps open. We have a gap open here, and we see a few legs higher. That eventually gets closed at 78. Again, trading range behavior, gaps get closed, and you can see the only gap that stayed open was this one, and gaps from yesterday. So we'll go over the measured moves. Opening range, broke out with bar 5 and 6. 1-to-1 was met. Of course, I got the hiccups. Here's another 4 bars, but we can see it wasn't met. It's the second leg. You're buying into the third leg, so the probabilities for getting 1-to-1, the probabilities for getting 1-to-1 of this leg is really low, and you can see that even if you shorted here, you would make 1-to-1 being a bear, and your stop would be up here. Are the EMAs custom? No, they're not. They're just a normal EMA indicator. They're just EMA 20, 45. And I use bar count normal 3. And the gaps indicator is a custom indicator that was given to me by a mentor, so I can't give that out. But we can have a how to draw gaps day lesson or something if that's what's needed. Strong bear leg here. We have a deep pullback, so let's put the measurement to the top of the pullback. Wow, look at that. That was met. You short the high of 34, short the low of 35. You're shallow if you short the low of 35, but the market did meet its 1-to-1, its minimum. The top of the pullback's up there, so it was met. Pretty nice leg right there. Maybe you just want to go 1-to-1 of this spike, and that's also met if you take the short on 39. 3-bar rally gets its 1-to-1, but trailing range behavior, that's a deep pullback. And just like how we have 3 legs here in a reversal, leg 1, pullback, leg 2, pullback, leg 3, reversal, that's a wedge top. Leg 1, pullback, leg 2, pullback, leg 3. That's a wedge bottom in a trailing range that led to a rally. And 1-to-1 was met if you bought low. If you bought the low of 54, you bought the breakout. 1-to-1 was met. Here's another 4 bars. I think traders would like to get 1-to-1. Put it below the pullback. That's met. Put it above the bar. So market order traders actually don't get their 1-to-1. You'd have to fade the bear bar to get your 1-to-1. Again, now we have another 4 bars right here. 4 or 5 bars. Traders are going to want to get 1-to-1. However, now you're buying into a third leg, so be careful. Be cautious. 1-to-1 was met quickly. Maybe you don't want to fade 66 because you're afraid the market could collapse, which I think is fair. So you buy maybe the follow through bar and you still get your 1-to-1. Past bar 72. I wouldn't touch it, but today it did have a good tradable leg. So all in all, there were some tradable legs. There was definitely more scalping behavior. I think it was harder to trade. I actually didn't trade I didn't take any trades today. I've been trading. I've been doing pretty well on my account, so I'm just kind of walking it in until next week. I'll take some trades tomorrow, though. So I think we're going to wrap it up. If you guys have any questions, feel free to ask me in the comments or in Discord. Thanks for tuning in, everyone. I will announce next time I go live. These are going to be a little more random, but I will be going live for daily breakdowns, and I want to answer questions. Today was like kind of a test run to see if people would show up and how it worked out. I think it went well. Definitely got to work on the biggest thing is I was thinking about I can't edit this, so if I make a mistake, it's just on here forever. So yeah. So another question by Kevin: would you classify today as a trading range? Yes, I would. I'll classify today as a trading range for higher time for multiple reasons. So just looking at today's chart without using any other outside reference, big down, big up within the first like 10 bars up to bar 7. So big down, big up. That's trading range behavior. Say you don't catch that one. Well, now we have a rally here and a sell off there. That's trading range behavior. And if you still don't know, it's just trading range up until here. Look at this price action. We sold off to a trading range low and then we rallied back to the high. So we had big up, big down, big up. When you have multiple channels in different directions, that's trading range behavior. Now, if we want to tie in the higher time frame context and try and think, is today going to be a trading range before it actually is a trading range? We use the market cycle. So higher time frame context, sell off, rally, and so we have a sell off and a rally. We have 3 legs lower. Leg 1, pull back. Leg 2, pull back. Leg 3, pull back. Leg 4, and now we have a big rally. So once you start to see these bars right here, you could already think trading range behavior because of yesterday's price action. And the market also has a rhythm of expansion and contraction. I briefly talked about it like 13 seconds earlier. So look, expansion, contraction, 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 expansion, which is breakout, pullback, breakout, pullback. So expansion, contraction. We'll see what happens if we go more sideways or we have another trend bar tomorrow. Or it could be going up. I don't know. Bears did close this gap and start to rally, so that's good for them. Bulls made 1R of this, so they're going to want to go for from this low back up to there. Bears are going to want to use today as a pullback and target a 1R move down. So we'll see what happens tomorrow. I mean, both sides are trading range behavior, so it's 50-50 for both sides. Both sides have good reasons to want to measure move. Right in the middle of the trading range too, which sucks. Maybe tomorrow's an even tighter trading range. I don't know. Kind of a contracting triangle. That's annoying. Triangles are just annoying to trade in general. So yeah, I think that wraps it up. If you guys have any more questions, let me know. If not, please drop them in the comments or the Discord. I'll love to answer them. Thank you everyone for tuning in. If you learned something, share the show. Don't be a hoe. I will talk to you guys tomorrow. I'll drop the review. I'm not going to be live. I'm going to be trading sometime today. Thank you, everyone. Talk to you later. Bye.